Inflation. It's a word that sends shivers down the spine of every Indian household. We all feel the pinch in our wallets when prices of essential goods and services go up. For November 2024, the inflation rate in India stands at 5.48%. This figure represents the year-on-year increase in prices, meaning prices are 5.48% higher compared to November 2023. While this rate might seem like just another statistic, its impact on the lives of ordinary Indians is significant. From the food we eat to the transport we use, inflation affects everything. Understanding this economic phenomenon is crucial for individuals and policymakers alike. This essay aims to demystify the concept of inflation, focusing on the Consumer Price Index, or CPI, as a key indicator. We will delve into the specifics of the November 2024 CPI data, highlighting its impact on different sections of society. Finally, we will explore the potential trajectory of inflation in the near future and how the central bank aims to manage it. The Consumer Price Index, or CPI, is the bedrock of understanding inflation in India. It acts as a barometer, measuring the average change in prices paid by urban consumers for a basket of consumer goods and services over time. This basket comprises various items categorized broadly into food and beverages, fuel and light, housing, clothing, and miscellaneous items like education, healthcare, and recreation. The CPI is calculated by tracking the price changes of these predefined items across numerous markets and cities in India. These price changes are then weighted based on the average expenditure patterns of Indian households. The resulting index provides a comprehensive overview of the overall price level changes experienced by consumers. Essentially, the CPI tells us how much more or less consumers are paying for the same basket of goods and services compared to a previous period, typically a year ago. A higher CPI indicates inflation, meaning prices are rising, while a lower CPI suggests deflation, meaning prices are falling. Understanding the CPI is paramount to grasping the dynamics of inflation and its impact on the economy and individuals. In November 2024, India's inflation rate stood at 5.48%. This is a decrease from 6.21% in October. The rate remains above the Reserve Bank of India's target of 4%. Rural inflation, at 5.95%, outpaced urban inflation at 4.83%. Food inflation eased to 9.04%, but remains a concern. Housing inflation stayed stable at 2.87%. Section 4. The impact of inflation on the common man. The impact of inflation on the common man in India is multifaceted and deeply felt. A rise in the CPI reduces purchasing power, making money buy fewer goods and services. This is especially hard for those on fixed incomes like pensioners. Essential commodities like food, fuel, and transportation become more expensive. Families, especially lower-income ones, struggle to make ends meet. Savings also suffer, diminishing in value over time. Many alter spending habits, cutting back on non-essentials. Discretionary spending on entertainment and travel takes a back seat. People seek discounts and cheaper alternatives to manage expenses. Transportation costs rise, adding another burden. Fuel prices impact commuting and transporting goods, affecting everyone. Section 5. Looking ahead. Inflation and its management. As we move forward, managing inflation will remain a key challenge and priority for Indian policymakers. The current trajectory suggests that inflation may persist above the RBI's comfort zone in the near future. Global factors like supply chain disruptions, geopolitical tensions, and fluctuating commodity prices continue to exert upward pressure on prices. The RBI, as the custodian of monetary policy, will likely employ a combination of tools to rein in inflation. These might include adjusting interest rates, managing liquidity in the financial system, and intervening in the currency market to curb volatility. For the common man, navigating the inflationary landscape requires prudence and adaptability. Managing household budgets effectively, exploring alternative and cost-effective options, and making informed financial decisions are crucial in these times. While the government's role in controlling inflation through fiscal policies is undeniable, individuals too have a part to play in mitigating the impact on their lives.